Hi everyone, welcome back to Be Rich. Today Keshav has something to ask me. What is it, Keshav?
Sir, before the shoot, you said that Adani is holding the 70%,
More than 75%.
70% of his companies.
Hmm.
So I said,
It's his company.
It's his
It is
company.
only more
then
than
why should
75.
we
Who
care?
cares?
Why should we care, sir? Because
As an
it's
investor.
As an investor, I don't know.
Hmm.
But apart from that, we can
Dude, if it's not for investors, then why do we care about anything? Why do we care what Bill Gates has for breakfast? It's like literally like that.
No, sir. As
We
an
have to look
investor,
at the view of a lens of an investor.
yes, sir. As an
So
investor, we should
why?
care.
Why should
Yes,
we care?
sir, because he's getting so much of what to say, sir.
Okay, let me bring it to context. Let's talk about OpenAI. Correct? You thought the board of directors were in control. Correct? In a company.
Yeah, sir.
They fired that guy.
Correct, sir.
Right? Then what happened?
So then the employees made a strike and the co-workers.
Employees cannot control the board. The board can say, okay, you guys want to quit, quit.
Correct, sir.
You want to leave, leave.
Sir,
correct. Like in the case of Twitter, Musk was firing everybody. If they all staged protest also, no problem. You've seen many companies where employees go on strike. You've seen in India, even Maruti Suzuki had a problem with it. All the workers went on strike. Factory wasn't working.
Yes, sir.
But the board of directors did not get sacked.
Sir, but what I saw is there are around 850 people in the company, I think so, sir. More than 600 people refused to work in the company, and the co-founder is not happy with the decision of the board of directors.
But they could not make him come back. Who made him come back?
I think the employees only, sir. Because if they refuse to work,
that is all in the news, man. The employees cannot control the board.
Then did Satya Nadella...
Correct. Okay. Why does Satya Nadella able to do that?
So because he owns 49% stake in the OpenAI.
Yeah. What is he?
He's Microsoft CEO, sir.
He's an investor.
Investor in...
Yes, he's a shareholder.
Okay, sir.
So who has the most power?
So shareholders.
Correct. So if Adani controls more than 75%, what happens?
Okay. Nobody will...
The board, everybody.
Should...
It is literally his personal company, man.
Okay.
This is Kitty Bank.
Whatever rules he's going to put, they must follow.
Yes, because the investors decide. Majority of investors are him. If he puts anything up for vote, he decides, he says, okay, I must be paid $1 million a second is my salary. The board says, no, that is crazy. We'll ask the investors in the meeting. Investors get to vote. And if investors...
Then he will vote for him. Sir, understood, sir.
Becomes crazy. There's no corporate governance anymore. Okay. That is just one. Second is something is known as volatility. Volatility is what?
So the movement of price, sir.
Going up and down. It's supposed to be a little fair. So you're supposed to know what the true stock price is.
Correct, sir.
So if he wants to, if he's controlling the supply of the shares in the market, he can suddenly raise the price by closing the tap. If he wants, he can drop the price by opening the tap. So he controls where the price is. So when you're seeing Adani shares going from 50 rupees to 1,500 rupees in 3 days, you should be scared because he's controlling it. Because you may be thinking, that's not a plane, guys. That is the construction happening in the office. So I'm sorry if you hear it on and off. There's little we can do. So he can control where the price is. And you should be worried. Share price is not moving because of earnings or some order he's grabbed. He'll make it sound like that in the media. His PR machine will make it sound, we have bagged one port order. We bagged this order, that order. Our sales is going up like this. The share price might be just moving because him and his brother have decided to send it up a little bit. And now that he controls that, he can go pledge those shares and he can borrow as much as he wants against those shares. So as an institution, what can you rely on? As a bank, you don't know this, right? This is all not known.
Is it like a digitalized version of what Harshad Mehta did, sir?
Something like that.
Related. Okay.
He's controlling. Harshad Mehta is a little more complicated. He was doing something slightly different. We can talk about that in another video.
Okay.
But it is manipulation.
Okay.
It is underhand table dealings with his brother he is doing. So he is controlling. As an outsider, as an investor, you don't know all this. We didn't know all this.
Correct, sir.
So we looked at the prima facie and we thought, okay, prima facie. And we said, this the price must be this. As a bank, as you're lending money to him, we look at it and say, okay. Now that it's come out, they're just jacking it up. There's only 3 shares trading in the market and 1,000 people are running behind those 3 shares. Price, of course, can go way up.
Correct, sir.
Imagine that. There's only 2 iPhones in whole of Chennai. Imagine the price of those 2 iPhones.
It must be on another level, sir. Correct, sir.
Imagine every single cine actor, industrialist son, daughter wants that iPhone.
Correct, sir.
It happens when they launch a new phone. The first few phones which arrive in Chennai.
Limited edition.
No, not limited edition, man. It's coming through the grey market.
Yes, sir.
It's launched in the US yesterday. It'll take 2 months to come to India. But a few pieces have landed from US in the first flight.
So that will cost more, sir.
Whatever the guy is demanding as price. Because there's a demand in the market.
Correct, sir.
The same thing he was able to do with the shares. This is what's basically come out. And this is a problem when his family and everybody are sitting and controlling more than the allowed float. According to India, you're allowed to keep up to 75% is what I think, if I'm right. You can hold. Beyond that, it has to be not held by you or anybody in your family.
By public.
Yeah. The problem in India is we have family-run businesses, family capital cronies.
Correct, sir.
Every single big business in India is a family business.
Correct, sir.
Okay.
Yes, sir.
That is a big problem in India. So investing as an investor, we're always told, Anand tells you, look at the PE, look at the balance sheet and everything. Yes. But that's why I keep saying, first look at the promoter. Anand also says it. First see the promoter. If you're not able to know anything about the promoter, don't bother. Remember we were talking about those egg company?
Yes,
that's
sir.
why I said, go check. You were saying
sir.
the numbers are looking great, sir. But we don't know anything about the promoter, boss. He can be doing an Adani on you. Then he found out the shareholding. He owns most of the shares, then his friends own most of the shares. Very little is actually being traded outside.
Correct, sir. Now understood, sir.
Then you came and did research and said he's a great guy and all that. But how do we know?
Correct, sir.
So when you have so many companies in India, most of them are family run, family owned. It's very difficult to know what is happening.
So now
that's why when you're investing, just don't go by numbers.
We should look up who still.
Correct. So when you look at it like that, the number of companies you can actually trust and put money into in India is very small.
Okay. Understood, sir. So now I came that we should.
And if you're wondering how unknown companies suddenly getting IPO launching, it's all through your mutual funds. The mutual fund manager will be deciding. You're launching Keshav Kit investment Tata company. You reach out to Vinod Srinivasan, fund manager, and say, hey, Baba, we're good friends. I need you to buy some of my shares, man.
Okay.
I say, okay, how many shares? Buy 500 crores. I'm controlling so many thousand crores. Okay, Baba, take 50, 60 crores and buy your share. Keep it for some time. It's not even my money. Investors put the money into the fund. I'm just enjoying it. And you will send me on a holiday to Dubai for a while.
Understood, sir.
Anyway, so this is the kind of capital cronyism that happens in India. So as an investor, you have to be careful. Especially when you're a retail investor and you have a little money. That's why when Anand says the market is overheated and all that, you should be very careful. Because you do not know what the cracks will come and when the price correction will happen. Okay, when you have 1,000 crores in your account, you don't mind losing 5-10 crores. But all that you have is 50,000-60,000 rupees and suddenly it becomes 2,000-3,000 rupees. And then you have to wait for 10 years for it to become back to 50,000.
Normal.
Okay. 50,000-60,000 rupees. It can be devastating.
Understood, sir.
All right.
Correct, sir.
I hope you guys enjoyed the video. I hope you understood why you should be careful while investing in India or in any market, that you should pay attention to the promoter and why we keep on saying promoter is paramount. This is why we keep repeating this over and over again. Please do your due diligence before you invest in any company, even if it's a Tata. Thank you for watching the video and we'll see you in the next one. Bye.